Let's try to understand the exact investment appetite for a VC. So they usually invest in larger deals. I think we very much covered that, but how large is large? It's usually larger than the investment that any angels would invest. And usually they want higher ROI, higher return on investment, usually around 10 times or more. Again, it depends on the VC in your country. Some would take 5 times or maybe less. But usually they want something higher than any other traditional investors. And they look for high growth businesses to invest. Businesses that scales very fast. When I say high growth, I mean like companies that could grow their revenue exponentially. Usually those kind of companies are technology companies. Companies like online companies, tech companies, AI companies like Facebook, WhatsApp, Instagram, virtual reality companies who could provide fast scaling. So imagine if you're running a restaurant, and definitely a VC wouldn't invest into a restaurant because it's slow to grow. To grow a restaurant business, you need to open a lot of restaurants, which takes a lot of time and a lot of capital. So definitely VCs don't invest in restaurants. And they invest in early stage growth to late stage companies. Some VCs do invest in early stage but not seed stage. Early stage could be something like pre-revenue or making revenue but without any profit. And definitely they would like to invest into companies which is in the growth or later stage way, such as pre-IPO. And they always like companies which could cover a big market size. How big is big? We are looking at maybe around more than $1 billion. Again, it depends on the VCs that you're talking to. The larger the market, the better. For example, the consumer market. Consumer market is always larger than the B2B or business to business market. So you see that a lot of VCs like to invest into consumer markets, for example, like social media, mobile application, technology that serves the public, the general, and consumers. And they don't usually invest in service-based business. Service-based businesses like consulting business, marketing firm, restaurants, and any sort of these traditional businesses. So they look at more for technology businesses. And this is a good one that people sometimes don't understand. VCs invest in companies which they could find an easy or a good way out. Remember, the first thing that they invest is to get more money. So they want to find a company that they could easily exit from with a large return. So if you're a company that is difficult to exit, they may not want to invest. There's a VC that even told me that before they even invest into a company, they actually thought about how to divest, how to exit from it. So before even they enter the door, they're thinking of how to exit the door. So if you're a company that's easy for them to exit, or they have a plan on how to exit from your company, for example, they could easily sell your company to another larger company, which they already know, which they think that might want to acquire your business, say in the next 4 to 6 years, then they will like to invest into you. But if you don't have a clear path for them to exit, they may be a little bit reluctant to want to invest in you. Let's say, for example, they think that it's hard for your company to be acquired, or it's hard for your company to be listed on the public exchange. So please take note in that. And also, some of them only invest in specific areas. So there are a lot of technology areas that someone could invest in. Some VCs only like certain specific niche areas. For example, some only invest in big data, blockchain, Internet of Things, IoT, AI, or so forth. So you want to go to the website and find out what areas that they want to invest in and who's in charge of that area. Then you would like to contact that specific person who is in charge of that area and send them your business plan. Because usually the person in charge of that area would know your business better than anyone else in the VC firm. And also, please remember that generally, they like to invest in companies that are not too far away. I mean, think about it. Would you like to invest in a company that's so far away from where you are now? For example, if you're in Asia, would you want to invest in a company that takes 12 hours flight to go and visit them? And vice versa. If you're in the US, would they be keen to invest into companies in Asia? Probably yes, probably no. It depends again. Well, they may have a management company in Asia to manage their investees in Asia. Usually that's how it works. But if they don't have any presence in a country, it'll be a bit difficult for them to fork out the money to invest in you because it's hard for them to manage the money when they are too far away. There's a rule of thumb in Silicon Valley that I heard previously that say that VCs only invest in companies that is not more than 1 hour drive away. So remember that that's just a rule of thumb. However, you may argue that, hey, but I've seen a lot of VCs investing into a lot of companies that are located far, far away. Well, yes, especially companies who are already in a very mature stage, such as those who are growing well, who are in a later stage. So those companies have less risk to invest. Earlier stage companies usually have higher risk. Hence, they want to make sure that they could easily manage their investees by not being too far away. And you may have heard of corporate venture capital, such as, or in short, CVC, where they only invest for strategic reasons. For example, there are a lot of companies like Google has its own venture capital arm. Oracle has one as well. So they actually set up this venture capital arm as part of their business for them to specifically invest into companies who could offer value to them. Like, for example, they invest into a company who has a technology that could make good use of, or a company who could make good use of their existing technology. So remember that if you feel that your company is doing something that could complement these corporate VCs, you may go ahead and try to apply for investment from them. So these are the few reasons who they will make a venture capital to want to invest. So these are a few ideas to give you to understand what creates a VC's investment appetite.